Only 1 in 5 small businesses track their numbers weekly. You have to track your numbers. Otherwise, if you can't measure it, you can't manage it. You can make the best pies in the world, but if no one knows your store exists, doesn't matter how good your pies are. So when you're a small business owner, a lot of your time, attention, and money is spent on the things that produce more time and money. A lot of people trying to be technically perfect before being marketing perfect. You see this a lot with people with qualifications. They're like, I need a qualification. I need that technical skill. I need that. The very best coach doesn't have the best coaching business. Time wasters that happen in your business that cause a lot of money to leave your bank account and don't produce anything is, I'm Lloyd James Ross, 7-figure investor and entrepreneur, and I've helped thousands of business owners and professionals turn financial stress into success. If you're stuck in old money habits, overwhelmed by investing, or unsure where to start, this is for you. I'll give you the mindset and strategies to take control, grow your wealth, and achieve financial freedom. It's time to make your money work for you. Are you a small business owner, meaning do you have a team of less than 20 people or perhaps earning less than $5 million turnover per year? Are you a consultant? Are you a coach? Do you run an agency? Are you a small brick-and-mortar player? Are you running a trade business? Are you in network marketing? Are you making money outside of general 9 to 5, and are you your own boss? And if you are, then you're a small business owner. And so in this episode, I'm going to dive deep into what makes successful small businesses from a financial standpoint happen and what makes them fail, and some catastrophic things to look out for as a small business owner so that you can actually know where you're going to die so you never go there, all right? And I want to impart some value to you in this episode so that if you are a small business owner in any of those categories or others, you know exactly what to do when it comes to your money to have success. Because as a small business owner myself, I've got 4 small businesses. One of them is 11 years old, the other now in its 6th year, and the other 2 are coming out to their 2nd year. So we've got the runs on the table to say we've had success in those areas. And I've also resurrected some businesses in the past as well. So if you're someone who wants to get value, I'm the guy, I think, on this episode to give it to you. So here, I want to share some stats with you first, okay? And then I want to go into some of the areas that you would want to get great at, and give you some pointers, and then share some more stats as we go through to make sure you're not one of the statistics, okay? So here we go. This is wild. 60% of small businesses fail within the first 3 years. Crazy, right? I've got these stats here. I'll put them up. That's from the Australian Bureau of Statistics, and I'm sure this would be in the United States, in the United Kingdom, wherever it is you're tuning in from. 60% of small businesses fail within the first 3 years. They're 10 years the first 3 years. So you have to, when you're building a business, you have to be all in. Like, I've seen people start businesses and they have, like, in their first year, and they don't ever work weekends. What? When you're in business, you are it. There's no one like, any advantage you can get, you take it. That doesn't mean it's going to happen forever where you got to work every weekend, but you do everything in your power to get this thing off the ground and then running smoothly until it's sustainable, okay? Second stat, 39% of small business owners pay themselves a regular salary. So a lot of people aren't even paying themselves regularly. So they don't know what's their own personal income and what's the business's income. Okay, so they're working. Some people are working for free. Some people have a small business and they're just working for free. They're not even paying themselves. They're just cooked. They're like, we have nothing left. They're putting everything back in the business. They're not paying themselves anything, and they kill themselves until the business bleeds or they bleed to death. 82% of businesses fail due to poor cash flow. I would say this is an absolute killer. We'll talk about this in the episode. So mismanagement of where their money's going. And there's a very cool tactic I'll give you on this episode as to what you can do straight away, what I've done and I continue to do to make sure I'm making more money than what's going out. Because it's as simple as that. Only 1 in 5 small businesses track their numbers weekly. That means their financial numbers and also their sales and lead numbers and KPIs. Like, you have to track your numbers. Otherwise, if you can't measure it, you can't manage it, right? So that's some of the statistics we're going to jump into. I've got some really cool stats when it comes to taxes here too that you're going to love. We'll get to that as we go through. So the greatest killer of businesses is that one that I said at the end there, where only 1 in 5, that's 20%. Only 20% of business owners actually track their numbers. So here's the thing. If you don't know where your money's going, then you can't make business decisions. So if there's an opportunity in your business to scale up, put on another team member, buy some software to replace your time and scale up and get speed, to invest in marketing. Because if you're not investing in marketing, generating leads and making sales, you don't have a business. So how do you make business decisions with your capital if you don't even know how much capital you have? That's the trick, right? And so as a business owner, most of your time and money, just so you know, most of your time and money at the outset is on generating leads and making sales. If I could just give you the core of what a business is, because I think people misrepresent what business is. They think it's an office, they think it's staff, they think it's uniforms, they think it's a lease, they think it's, I don't know, that stuff. They think it's the technical work even. Like they actually think even it's technical. Like if you're a baker, you think your entire business is how good your pies taste. That's a part of it, but it's also how many people know you exist. Because if you have the best pies in the world, and you can read a book called The E-Myth Revisited by Michael Gerber, he talks about this. You can make the best pies in the world, but if no one knows your store exists, doesn't matter how good your pies are. So when you're a small business owner, a lot of your time, attention, and money is spent on the things that produce more time and money. Okay, and that happens to be the marketing enterprise of the business. Generating leads, making sales. Generating leads, making sales. All the most successful business owners I know have generated leads and made sales, right? But of course, over time, you can get better at product development. If you have a great product, for sure, but it still doesn't sell itself. Even Apple, this is arguably the greatest product that's ever existed in the world, the iPhone, and it still doesn't sell itself. You think Steve Jobs in fact, Steve Wozniak was the tech guy. He made the Apple Mac, the Macintosh. He made that, right? And he was the technician. But Steve Jobs was the guy that got the eyeballs on it. And it's what made him an absolute success. So he was a product developer guy too. But with Joni Ivey, they created this incredible product, but it didn't sell itself. So most of your time, effort, money is on marketing and sales, okay? Time wasters that happen in your business that cause a lot of money to leave your bank account and don't produce anything is product perfection. That means you're putting so much time and effort into your offer that you actually don't even know if it's proven yet. And I've seen this happen before where people craft out a cool offer, a cool niche, they put their product to market and no one buys it because they actually haven't tested it to the marketplace first. So you can A/B test it to the marketplace first by actually putting out a pilot product that's not perfect. And I look at all of our products in our businesses, high performers get to 80 to 90% and then they execute. And then they fix it on the way down. So you don't have to get to perfection. I remember there was a great story shared by Grant Cardone, and he said that, love him or hate him, he said that when he brought out his very first book that launched his sales training business, which is Cardone Capital now, really, or X, what is it, 10X? The 10X business. He said it wasn't perfect. There were spelling mistakes in it. He just put it to market. People said, you got spelling mistakes. And the truth is he did, but, it's not catastrophic, is it? Like, because he was getting it out to market fast to see if it was proven that it was good. And so you can get away with those small errors when you first start. So don't waste too much time on product perfection. The next one is technical expertise. And what I mean by this is a lot of people trying to be technically perfect before being marketing perfect. And so you see this a lot with people with qualifications. They're like, I need a qualification. I need that technical skill. I need that. And you see it all the time. The very best coach doesn't have the best coaching business. The very best technical expertise in anything doesn't get the most clients. I would even go as far as saying the best doctor doesn't always get the most successful business or make the most money. It's the doctor that can get the most patients in the door. And you still have to be good at your quality. You still have to be effective, right? Like if I created one of these books here and it was just didn't make sense, there was spelling error, you think I'm an idiot. But these books, this one in the middle, this Money Buys Happiness book here, this has sold 30,000 copies. This one here, Become Time Rich, just went #1 bestseller. It just outperformed 4-Hour Workweek and Buy Back Your Time by Tam Martell. It went #1 just last week. And what's interesting is this, it's not necessarily the best book. I've never read all the books, so how do I know? But I know that is a #1 bestseller. That sold 30,000 copies and changed a lot of people's lives. And this one, when I first started, look at the size of this book. Yeah, it's just, I want to get something to see if it was proven that I just want to get some knowledge in here and see if people like it. So I didn't get any qualifications to do that. I didn't do a book writing qualification at university. This one's published by Wiley's. It's very, very highly polished. But at the same time, every book is unfinished. So every product you have and every technical expertise you have, I'm also not the best coach in the world. There's so many great coaches. How would I know? But I know it. What I know is what I have out there is effective. And that's how you know. So go and deploy your skills and your knowledge until it's effective and it gets people the results they want and you're good. You don't need to be the best. You don't even need to be the first. You just need to be effective, right? And I see people wasting time on administration. They're shuffling the papers on their desk and thinking it's work. They get on Zoom calls. And I had this client once, really funny. I helped him fix this problem. Loveliest guy. And I said to him, like, he was trying to make money, and I was teaching him some of these steps we teach in one of our programs, and he just wasn't getting traction. I'm like, he said, I've run out of time. Like, what are you doing? Like, what are you doing? So I asked him to send me a screenshot of his diary. And he said, I don't know why I'm not making any, I'm doing all this work. I'm like, what work? Send me your diary. And I looked at it and it was meeting on Zoom, meeting, group meeting. It's just meetings everywhere. And I'm like, what is this, dude? He goes, oh, that's my networking work. I'm like, dude, that's fake work. He's like, what do you mean? I said, fake work. It feels like you're doing it. It feels good. You're just talking to people and getting on calls and training calls and everything, but it's not work. He said, well, what's the work? I said, well, you're an insurance business. Yeah. He goes, yeah. I said, how many prospects do you have? I go, what do you mean? He said, well, how many people have you directly asked if they need a policy? He's like, none. I'm like, you don't have a business. So I said, this week, I want you to steer all your attention towards that and see what happens. So he got rid of all the fake work and he started putting his attention there, the real work. Lead, sales. So I said, how'd you do? He goes, I made money. I said, great. So you got to be careful as a small business owner. You're not wasting a lot of time working on fake work. And a lot of business owners do this, okay? I used to see it in the real estate industry. I used to, when I was 20, I worked for, got my full real estate license that I still have, by the way. And I worked in commercial leasing and sales with a company called Ray White here in the Gold Coast. And I was, 19, 20. And I remember there was people would come into the real estate agency who were new, and they'd come in and they'd do a lot of pretend work, and they pick up the phone once, and then they go into the water filter, get a drink, then they go to lunch for a bit, then they read the paper, and you used to see them and like doing all this fake work or no work. And then after a few weeks, we kind of have bets sometimes to see who would stick around the longest. And they'd disappear, but it wouldn't just disappear out of the industry, which they should have. They actually went to another real estate office and like, oh, go here because it'll be different. But wherever you go, there you are. So be aware of the fake work you're doing. Like if I'm doing fake work, I'm very quick to pick up and I'm like, hang on a second. Is this producing any income for the business? And if the answer is no, then stop doing it and go and start doing stuff that's going to produce income. That, I hate to tell you, but it's leads and it's sales. It's the two factors that put you on the presser. They put you on your head above the parapet to be shot off. Like it's the two activities that are the most uncomfortable because you can be rejected, humiliated, and embarrassed in those two areas. So they're the areas you want to go for. Now, when it comes to actually having success in your business with your lead generation, your sales and so forth, you got to track your numbers from the activity. So how many leads, how many sales, how much revenue, how much profit, right? So here's an example. I know straight away that if I want to make money, revenue, sales, I have to do certain inputs. So I'll say, well, how many leads did I generate this week? X. How many sales did we make this week? Y. Right? And how much money did it cost to get those? So inputs, cost of goods sold. So I have to know a couple things. On the top line, I have to see how much revenue did we make? What are the costs of producing that revenue? How much profit did we make? And then how many expenses do we have as a business? And how much my net profit number at the bottom? Because if that net profit number is negative for quite a period of time, your business is losing too much money. You have to sort out your expenses, you have to reduce your cost of goods sold, or you have to make more sales. But generally speaking, it's sales first, then you work backwards down. Okay, so you got to track your numbers. So I've got this cool tracking sheet that some of our students have. Very simple, and it tracks all the 12 months. And it's just very simple. It's on a spreadsheet, tracks on a monthly basis on your business. It tracks revenue, cost of goods sold. It tracks gross profit for the month, and it tracks all your expenses. And you can very clearly see in your bank account what's coming out. And at the very bottom, it says net profit. Now, I know that if that net profit is zero, they've got some serious problems in their business. And it's very simple to fix because we know then the highest leverageable point in the business to work on. And normally it's sales. It is. It just happens to be sales. But if you don't track your numbers on a monthly basis, I'm talking about your financial numbers, how do you know your business is healthy? Like how? How do you know where to steer money towards marketing? How do you, and I think a lot of people also, if you don't track that, and you've got a lot of team, I see a lot of businesses get a lot of team on because they're playing the ego game, the social status game. So they want a big team. Like, oh, I've got this assistant and I've got this person on the team and that person on the team. Okay, they got 5 or 6 or 7 or 10 members on the team. They're not making any money. And then you can see in their spreadsheet, they've got a big fat expense column with wages, leases, people. I see this happen all the time too. Like I famously, in this book, I talk about it a lot, Become Time Rich. I famously work in a cupboard at home. And the reason I do that is because in our expense ratio in our businesses, I want to have office overhead at 0. Like I'm already paying rent at the house. Why would I want to go anywhere else? So I'm very conscious to keep my business expenses very low as possible. I very seldom want to add to that column. If I add to that column, it's in marketing because I know that's the biggest bang for the dollar. And I'm just very conscious not to add overhead onto a business because it's non-productive. Okay, so you got to be careful of that too. But if you're not tracking your numbers, you're not going to know what's what. The third thing I want you to consider doing too when you start a business is, you are the business at the start, so consider working weekends. It's not a 9 to 5 gig. You don't just knock off at 5 o'clock and forget about it. You work in the evenings sometimes and you work on weekends sometimes. And I think I learned this from my dad the best. He has always worked Saturdays. It's just such an advantage. You think about if there's 7 days a week and you can work one extra day than others, there's like a 15% improvement in productivity and advantage. 15% advantage in time. So I've always often worked Saturdays. In the morning, you can get a lot done if you get up early, get it done, then go hang out then go do your weekend. It just gives you such a subtle advantage over time. You compound that, it's powerful, right? And of course, don't just track your numbers for the month. I would track your business numbers from your bank account every single month. And I've been in situations in our businesses across the board where, for example, with one of our businesses, we went through COVID and it really took the wind out of our sales from our income. And it took our income or our net profit from say 250K down to about 125K in about a year. So it was a 50% hit from the business, from the net profit of one of these businesses. And at the time we had outgoings that were commensurate to the 250. And so in that time when your money gets cut down sometimes from COVID or regulation change or the economy changes, something changes, you lose a big customer, you have to be very quick to adjust your expenses. So I remember sitting down, going across our businesses, getting the spreadsheet out and just looking at exactly what was costing money. And I started to make bold actions. So I talked to my wife about it. We're going to change this in the business. We're going to change that. We're going to cut that. Because when you start cutting stuff away, you then can bring your profit margin back down because your business should be able to make profit in every season. You just have to manage your expenses. Okay, so if you need to button down the hatches and really protect your outgoings and your income, you've got to actually put it on paper. And so many business owners are flying by the seat of their pants. Like how many just don't put it on a spreadsheet, right? So if you're doing that, you know how much profit you have, and then you can see how much you can invest back in the business. Just quickly, if you're ready to take control of your finances but feel stuck on where to start, I have a solution. My book, Money Buys Happiness, simplifies investing and wealth building with practical steps to help you achieve financial peace. Get your copy via the link in the show notes and let's get your money working for you. Now back to the episode. Now, again, in the earlier days, you want to invest a fair bit back in, but not all of it. And I see this happen a lot too, people just investing everything in it. If you invest everything in your business, one, there's nothing for you personally to live life. And secondly, there's no diversification of income. So there's no diversified components to that. So one thing I've always done as a business owner is I have this process by which I call reverse saving. And it's where every dollar that comes in, I set aside 10. Here's how I set it aside. I'll give you an example here. Let's say I made $10,000 for the month. Yes. $3,000 goes to a tax account. So 30% for taxes. That's GST and company tax. Because company tax is about 25% at the moment in Australia. It could be vary wherever you're listening to. And GST is about 10%, but you get deductions, so it's 5%. So I know that I've got to set aside 30%. So if I make $10,000 for the month, as an example, I'd set aside $3,000 for taxes. That's not my money. One of the greatest pitfalls, one of the greatest brutal things that business owners do for themselves is they don't plan their tax. It happens so often. And if you don't set aside tax because you're used to your tax being taken out of your pay at a PAYG job, you're now in charge of paying the government the tax, right? And so you've got to set aside the money yourself in advance and be ready to pay. I got off the call with my accountant the other day and I was wincing. I was like, what's the tax bill next year? He said, this year's not too bad because you paid some along the way. I said, that's good. He said, next year's a problem. I was like, yep. But I know it's coming. So I'm planning already for that to come. So every amount of money that hits my account, 30% for taxes. Make sense? Do that. Next, you're like, okay, well, I've got 70% left. What do I do? And that's when you go, okay, let's take some out for growth. Let's put some into marketing. Let's put some into, perhaps you need to spend some on product development or what it might be, but and expenses and so forth. So you're putting some money towards that. Fine. You've got to put some money towards running your business and also growing your business. But also what I do is I take away 10% of all I earn and I pay it to myself and I invest it. And I don't know how many business owners I've met over my career, solopreneurs, people who are starting a business, growing a business. So many of them have nothing to show for it. Like after 5 or 10 years, and they got no assets, like none. They don't even have savings. They don't even have 100 grand of liquidity. They're flying by the seat of their pants every single month for like years. They must be like in exhaustion. They must be like flipping, have adrenal fatigue. Like, what a way to run. I don't know how people run a business like that, because you can't take advantage of opportunities if you don't have any cash. And you can't do, what happens if something happens to your business? You've got nothing to fall back on. So every time I make money, we set aside money for tax, we set aside money to grow the business, and we set aside 10% of all we earn is ours to keep, and we put it into shares. And I've been playing that game since 2012. So 13 years I've been playing that game. And that's a fun game because over time you can see your portfolio grow. And you still be able to run your business on 90% of the income that's coming in. If you can't, you got to reduce your expenses. Because I like to scale my businesses and scale my wealth at the same time. And you can do both. It's not like, I'm going to make one of the biggest mistakes business owners make is they go, I'm going to invest everything back in the business, get it to 10 million a year, and then I'll start investing. And of course, by the time they get there, they're too afraid to put in $1 million of investments because they've never done it before, because they've got no confidence in it, because there's no habits, right? It's why when I go to the gym to get in shape, I don't go, that's it, I'm going to go to the gym, I'm going to do 4 workouts a day for a week and get in shape. No, it doesn't work like that. You got to find a rhythm in your body and your health. You got to find a rhythm in your business and investing. So set aside your tax, critically important. Invest in your working capital of your business so it lives, but also set aside some money to pay for yourself. And if you can't afford it, either you're not charging enough, you got to increase your prices, or you're not making enough sales, or your expenses are too high. So you got to look at what's what. But I've always done that, and that's why I think I'm one of the few business owners that has scaled a multi-million-dollar share portfolio and have no debt at the same time as running and building and buying 4 businesses. So be very on top of your expenses and be very measurable in how you're managing your money, okay? Hope that makes sense. All right, now we've covered that. Just on the tax side of things, this is very important. I was looking at some stats on the tax of business owners. So when I said most business owners don't set aside tax, and there's people I know who are like, Lloyd, I haven't set aside any tax. I'm like, oh my God, what do you? They go, 80 grand. I'm like, where are you gonna find 80 grand? They go, credit card. I'm like, you're dead. Like, you are dead. And I've seen people have to go bankrupt because they just cannot pay the tax office back. Like, far out. Don't do that. So here's the stats. 63% of small business owners don't set aside money for tax. This is why 63% fail in the first 5 years. That's a dead-on stat. There you go. Check this out. More than 50% of Aussie sole traders don't know where their tax bracket is. Do you know how easy it is to find your tax bracket? Here's how easy it is. Ready? Let me show you. Go to ChatGPT. Type in your business's revenue, your net profit. If you're not tracking your numbers, you won't be able to do it. But put in your revenue, your net profit, and where you live in terms of the country and state, and then ask it, what is my tax bracket? And ask it, how much tax will I pay next year? Ta-da! Done. Okay, good. We can move on. 1 in 3 small business owners confuse revenue with profit. Revenue is the top line number that comes in first. So the money that hits your account from sales is called revenue. Okay? That's it. So for example, if I made $10,000 of sales and cash collected for the month, that's revenue, yes? Well, realized revenue anyway, okay? So whatever hits your bank account is classed as revenue, okay? Paid revenue. The next one is under revenue, depending on what kind of business you've got, cost of goods sold is the marketing it costs to get. If you've got like a e-commerce business and you had to buy a product before you resold it, then that amount of product is cost of goods sold. So you have to deduct that from the revenue. That's your gross profit. But usually, simply, if you're a consultant or some sort of coach, it's revenue minus expenses of running the business, which is your marketing and da-da-da-da. Profit, it's yours. And then from the profit, you set aside 30% tax, and then you put aside some for yourself, and then you reinvest back in the business growth. Make sense? That's how that works. 70% of small business owners only rely on a single income. So the whole idea of getting into a business is to scale it up, but then set aside more. Like again, we've got 4 businesses in various industries. 3 of them are fairly linked. One of them is completely not linked, but great small business, and it's a partnership. And the other stuff we have is we own pieces of public companies. So we've got a share portfolio that produces income. And my wife has an incredible ability to like make income in multiple areas as well. And with all of that going on, we just have diversified our risk. That's all. Like, we don't have one business where all the money's coming in, we have nothing left. That's not a good place to be. And check this out. Stat number 5, only 1 in 5 small businesses use accounting software properly. So it's very easy to fall in the trap of using Excel as a spreadsheet to run your finances and tax for your business. And I've been in the trap too, because don't forget, our businesses we've built from the ground up just about. And so I know what it's like to get trapped in using just a spreadsheet. And it's good to use a spreadsheet without a doubt. And I encourage it because it keeps your finger on the pulse of your business. Like, I still like to spreadsheet our stuff, each month to know what businesses are doing what. And you get a good feel for it over time too. Like, I can tell straight away what our business is going to do and not do. But if I really need to dial it in, I can do a spreadsheet anytime. But what I eventually did, and what I'd encourage you to do too, and I'm sure your accountant will, is you'd want to apply some sort of accounting software to do it all for you, especially if you hate bookkeeping, of course. So you can use Xero. There's other ones out there like, what else is out there? Xero and Myob. There's these different accounting softwares you can use, but we use Xero. And Xero, you can attach it to your bank account, live bank feed into Xero, and it calculates all of your bookkeeping and accounting ready to go. And at the end of every quarter, your accountant's already got access to it. It's just, do not delay. If you don't have Xero if you're making over 100 grand a year profit and you don't have Xero in your business, get it in your business. Talk to your accountant about how you can implement it if they haven't so far. It just makes your whole life easier. But don't rely on it to give you cash in, cash out results. Rely on your own bank statement and your own spreadsheet if you need to manage your money closely, which is what I've done, all right? So just be aware of that. Yeah, so they're the tax implications and statistics. To avoid it, track your numbers, talk to your accountant, apply the software, and just take care of your business, all right? Now, the other thing is this. I learned this once, and to finish up, I just want to share this with you. It's amazing how you can take these lessons on board, but I was working in Abu Dhabi. This is before I was an entrepreneur, business owner. And I was working in Abu Dhabi as an employee, and I used to drive 3 hours to work and 3 hours back. I was on a big project. I was on the 6th largest project in the world, Yas Island in Abu Dhabi, where the Formula One circuit is. And I'd drive there 3 hours and drive 3 hours home. And I'd always put on like audiobooks. And I remember this audiobook, it was called, it was like top 5 entrepreneurship stories. And in one of the stories, this guy builds this business, and they had this one rule. And I used to always remember the rule. And every time I would listen to it, it would say drome. I was like, drome? What the hell is drome? He'd say, drome. I'm like, what's drome? And I've never forgotten it, but it stands for don't run out of money. Drome. And I know that sounds ridiculously simple, but what I've always tried to do in a business is at the very outset is create a substantial emergency fund, like a massive amount of working capital that's just sitting there doing nothing. And if you're in trouble all the time, if you're in financial chaos as a business owner month by month, week by week, whatever it might be, year by year, I would dare say you don't have a big buffer. You don't have a big emergency fund for your business. And you're clamoring to find capital all the time. You're clamoring to make sales to meet the next quota, and you're just chasing your tail all the time. And if that's you, you've really got to understand you've run out of money. And so don't run out of money. Drone means go and make a ton of sales, button the hatches, do not invest anything in your business, and make sale. Eat baked beans on dinner every night at home. Don't blast out your personal expenses. Don't buy a Range Rover. Don't buy a big property. Don't go out of your way to travel the world, buy business class tickets and put it on social media. Forget about all that bullshit. Just think, what can I do to get way ahead here so that I don't run out of money? And so here's an example of what we did was in our network marketing business, we built up a buffer of 50 grand first and then kept it. And in fact, now it's about 160,000. Okay. In our other business, we've got 350,000 as a buffer. It's a scaling business, and we always want to make sure we don't run out of money. Okay. Now, that doesn't mean that it's there to be spent on anything and everything. It certainly doesn't mean that I'm going to let the business fall into the hole, but it just means that if bad things happen over a year, it's not going to kill us. You just got to have more money than, it's got to feel a little bit uncomfortable as to how much money you got, right? But it took us time to build that up too. Like every single time I remember one business, we were making about 5 grand a month revenue. I was making 3 grand profit. And I'd take out half and put it into a separate account. I was in a hurry to get a big emergency fund for that business because what if we had a poor month? What if you had a poor 90 days? It's so possible. And I never wanted to be clamoring around. You never really want to be begging for money. And businesses are cash hungry beasts as you're scaling. So you want to make sure you've got a nice buffer, okay? And don't be in a hurry to spend it on random things. Just have it there as working capital. The same can be said for your emergency fund. Even when we first bought a business, we bought a laundromat business recently. We're looking for our second one now. And when we first got in, we fully financed it, and the objective, I talked to my business partner, I said, one, we're getting a buffer of 50K. Fact. He said, yep, done. And within 12 months, 50K. And we paid off debt at the same time. And our next goal, 100K. Because like, if you've got cash, like you just have so much flexibility. And we don't run away, and we're not like going to Hamilton Island together on a holiday. We're not spending all this money. You don't want to spend all your money too quickly, okay? And in all of our businesses, in our events business, we have a cash buffer. It's like, it's 6-figure cash buffer. Because at some point, you're going to need to take it to another level. And you've got to have the money to take it to another level, all right? So Drome, don't run out of money. Put a big buffer in place to be able to factor in any uncertainties in your business as you're scaling up. And of course, as you scale up and you're doing, lots of money, you can build a bigger buffer. Warren Buffett's buffer right now is 300 billion. Okay. He's got $1 trillion company. It's 300 billion. So if he's got 300 billion, I'm sure you can put together 30,000. Okay. That's my last tip for you as a business owner to manage your small business. All right. So hopefully that makes sense. And you've gone down and taken some notes with this one. If you've got value from this, send this to a small business owner you know of so they can run through this and checklist it out and talk to their accountant. They can checklist that and see if they're running the right things. I don't want you to be a statistic. Please don't be. I want you to be within the 40% of people that do last more than 5 years. So hit the subscribe button. Leave us a comment below. Which was your number one best tip? Leave me in the comments below. And I'll see you in the next episode of the Money Grows on Trees podcast. Thanks for listening to Money Grows on Trees. If you enjoyed the episode, leave a 5-star review on Apple Podcasts and Spotify, and subscribe to us on YouTube so you never miss an episode. And if you're serious about building wealth, make sure to check out the links in the show notes and follow me on all social media platforms at Lloyd James Ross for more. See you in the next episode.